Facebook shares have dived in the US after the social media giant warned it expects weaker growth. The stock plunged 20% when the US markets opened in New York, wiping $120 billion off its market value. Facebook has had a challenging year, with millions of users deserting it after the Cambridge Analytica data privacy scandal. Well, I'm joined now by the social media trade expert, Toby Bereford. Toby, good to see you. Thanks for joining us this afternoon. Has Facebook had its day?
Hi, Gamal. No, I don't think so. I think this is really just a blip. There are some pretty good reasons why their earnings have dipped, so I don't think it's anything really for stockholders particularly to be worried about.
A lot of people say with social media companies, it's all about trust, and given what happened with Cambridge Analytica, that trust has gone.
Yeah, I don't think so. I think that they've kind of responded pretty strongly to that that requirement, and they've got involved in this trust. So we're talking to Congress and so on, and they've put in place some pretty serious changes to their platform. They're restricting the ecosystem, sort of the ability for the ecosystem of developers, small businesses to kind of access that data, and Cambridge Analytica was one of those. I mean, what's caused this particular blip is that Facebook are making changes to the platform. Like any big social media platform, they're making changes to adapt to the changing way in which we use it. So, for example, they're putting a lot more emphasis on stories, so which is those ephemeral sort of Snapchat-like sharing on the platform. They've got 150 million people using stories on Facebook, and across all the Facebook properties, they've got 1 billion people using stories. So that's obviously a big new change, new feature that they're trying to bring in. And I don't think the advertisers have particularly caught up with that yet. They're still wanting to advertise with Facebook in the kind of the old way, and Facebook's already starting to move them on. So I think these sort of earnings blips really come when there are changes to the platform, and we have to remember these are intentional changes. This isn't something that's happened to Facebook from outside. They're positively making this move.
When the Cambridge Analytica scandal first broke, I did an unscientific study talking to a few young people, and you got the sense that many of them didn't really use Facebook anyway. They'd moved on to other social platforms like Instagram. I mean, to what extent would you say that is the case? And to what extent does that really matter? Because a social media platform like Instagram, Facebook owns anyway.
Well, that's right. And actually, it was interesting. This was the first time that Facebook actually brought the numbers of all its platforms together and said, across the big three, the Facebook, the Snapchat and Instagram, we have 2.5 billion people who used our apps in June, which is an astonishing number. So they've already kind of hedged their bets against that sort of move to Instagram, and there's no reason to suppose they won't do so again.
Toby, good to talk to you. I'm just going to take you live to Brussels now, where the Brexit Secretary, Dominic